This article comes from The Motley Fool, why Coinbase global stock plummeted by 8% today, which was actually on Friday. Coinbase global stock fell precipitously on Friday, and it wasn't hard to figure out why. Any company associated with the now collapsed Silicon Valley Bank and its parent, SVB Financial, took hard blows in the market today. Coinbase was a Silicon Valley Bank client back in the day, and the two companies' relationship went a little deeper at one point. So in the markets, you get out, ask questions later. Rule of thumb. Coinbase wasn't only a SVB client, it was also one of the company's potential shareholders. In 2014, when cryptocurrency projects and crypto-affiliated businesses were having a tough time securing financing from traditional sources, Coinbase gave a stock warrant to SVB. Apparently, this was part of a two companies agreement under which Coinbase could utilize the bank's services. So SVB gave Coinbase its startup capital, like it has done with many startup and venture capital companies. And this is why it's so important and so contagious. Investors shouldn't be swayed on Coinbase one way or another due to the SVB association. The two companies were tied fairly closely together at one point, but seem to have drifted far apart. Since the SVB contagion appears to be quite limited with Coinbase, at least as far as we know, the exchange-operated stock should be judged more on its own fundamentals and potential. So the fundamentals, revenue was down, over 75% year over year due to the crypto winter. Potential, yes. Coinbase has a lot of potential moving forward. So it should be judged by the fundamentals, the potential, but also the technicals as well. So let's go to the charts of Coinbase. And we're going to start with the monthly chart, like I always like to do. Alright, so, potential over time. Definitely get back to the 120 level where there are monthly sellers waiting. But obviously there are other levels in which price has to breach first before even considering the 120 level. Alright, so as you can see here on the monthly chart, price went through but did not breach the 13 simple moving average. When I say breach, meaning a close, a monthly close above it, and has since pulled back. We'll go to the weekly just to see what that looks like. So the moving averages are somewhat sideways. This is a 13 and a 26 simple moving average. So if you wasn't or could not read price action, you can just look at the moving averages, and that should tell you or give you an indication of whether the direction is upwards, downwards, or sideways, right? So it's sideways. Let's go to the daily chart. So there was huge volume on February 2nd, and I don't know what that was due to, some type of news event. But in the process, I'm on the 8 hour, let's go to the daily. Okay, so I'm not sure what this huge volume was due to, but you had a gap up in price, which got exhausted. Now, price is now back at the top of the zone where there are daily buyers waiting at $50. On Friday, price pulled back from the $52 level and closed at $53.44. So this is the line in the sand for Coinbase. I do anticipate there being more FUD. We could see prices continue to go down. The sellers may exhaust the remaining buyers at this level. Potentially, price will breach the daily zone and retest the lows from early January at 32.50. But a lot depends on what the Feds are going to do between now and Monday morning. That's going to be a big factor in the direction of Coinbase, as roughly 80% of a stock's move is due to its sector and or the overall broader market. Thanks for watching, subscribe, and please like the video.